Hey, welcome investors to the 40 Finance channel. Hey, November's been a wild ride in the market, certainly for me and anyone who's held everything from small cap stocks to consumer discretionary names. There's just a lot of variables out there right now. And for me anyway, the hard part has been trying to choose a direction. There's just been so many different headlines and so many different pressures coming into the stock market from different places, whether it's rising interest rates, the prospect of perhaps Fed tapering and pulling back some of the COVID stimulus that's out there. Then you have pressure over in China on their tech stocks. You have small caps basically getting crushed. And then on the mega cap side, if you think about the Teslas and Nvidias of the world, valuations, it's really hard to dig into them and say that this is a great price to buy in, at least where they stand right now. So for me personally, I've thought a lot about it over the Thanksgiving holiday. I've gotten dinged pretty good here in November, and I certainly don't want to set myself up to get in another losing situation or a potential losing situation heading into the first part of the year. I believe that the economy is improving significantly. I believe that consumer discretionary spending is going to continue to plow into the market. I believe that there's pockets of industry like travel that have yet to even see the full benefit of reopening. On the same token, I also believe that companies like Nvidia, whose stocks are arguably overvalued right now, still hold a lot of promise for the future, particularly with the rise in technology that we've seen over the past couple years. So with all those thoughts in mind, I made the decision that I am going to add the QQQ to my retail portfolio. This is a portfolio that right now only holds individual stocks, but until I feel better about the individual direction of individual stocks, I'm going to dollar cost average into QQQ over the next 60, 90 days. Again, I think that consumer spending, technology, company earnings are all ripe for the future, but trying to pick one or two names out of the bunch when there's so much pressure coming from different places into the market just doesn't feel like a good bet right now, particularly with what we've seen on some of the individual names over the past 60 days or so. All right, let's take a quick look at the QQQ today at 397. You can see it's up 1.69% compared to S&P plus 1, Dow 0.33, NASDAQ as a whole 1.48. Small caps or Russell are down just a smidge today. And if you've been following the market over the past couple weeks while this weakness has went on, people are piling into the big names, okay? So whether it's Google or Apple, Amazon, Nvidia, people are plowing into those names in sort of a flight to safety, if you will. And the QQQ does offer that to some degree. This chart I've put over here is the max chart. So it actually starts back in June of 99 or May, something like that. And you see this peak over here way back in 99, 2000. This was the last tech bubble, which some people would argue we're facing today. And it really did cost the QQQ years and years to get back to break even if you purchased on the top. So just using this simple chart, February 1st of 2000, you're at 106. Let's see when you got back to 106 just for fun. It could have been perhaps as late as April of 2015. But again, that's if you bought at the top, and it assumes you never average down on your pick through the whole time. So if you bought your first share at 106 and you average down over this long stretch, where you're in the 20s and 30s, certainly you broke above water at some point well before 2015. That being said, it doesn't take a genius to see this huge peak that is formed here, and a lot of people wonder what is after that peak. I certainly wouldn't blame anyone who thinks that it's too risky to get into right now. Now, as I go through this journey, personally, I'm going to be focused on RSI levels to choose my buy spots. And if you see this chart here, this is a 6-month chart. And really the target, if you really want to wait for the lows at the low, you want to get in on the 20s. If you look off to the bottom left here, as I go through the graph, this number will update. Today we're at 55. If you go back to right before Thanksgiving, you had a 38. So I actually started my position in that range. And if we go back to the last fallout, which would have been in late September, early October, you had a range in the 20s. And at least on the 6-month view and even the 3-month view, 20s is a good place to be. All right, let's take a quick look at the holdings of QQQ because it kind of exemplifies where my struggle is mentally on stocks that I'd be interested in buying versus what the QQQ holds. Obviously, at the top, you have the big dogs, Apple, Microsoft, Amazon, Tesla. And actually, Tesla here is a really good example for me because I wouldn't touch Tesla stock at today's valuation. Yet, those who have sat in my camp for 2 or 3 years now have certainly come up wrong in any projection that Tesla's growth would slow or stabilize. Just hasn't happened. It could very well happen tomorrow, but at the same token, getting into the QQQ sort of forces me, right, to have some Tesla. And as it turns out, regardless of my personal opinion, Tesla has performed very well. All right, after Tesla, another one that's just like it, NVIDIA. Great company, lots of excitement for the future with NVIDIA. I wouldn't buy it at its current price. Now I'm going to have a small slice of NVIDIA. I follow the stock very, very closely, and I'm always surprised how far it runs up. Now, if that happens, I'll be able to get into it. And let's just say tomorrow I turn out to be correct in my assessment that Tesla and NVIDIA are massively overvalued. Well, if the rest of the market decides that too, and we have a 20-30% sell-off, that will for sure bring the price of the QQQ down and the RSI down, and I will jump into those dip opportunities and go from there. This is a market cap weighted stock. So you see like right now, Apple's at the top. Tomorrow it could be Microsoft or Amazon. But basically with market cap weighted, you're letting the market figure out what's worth buying, what's worth selling, and how it should be allocated. And for a portion of my portfolio, I think that that's a good strategy. We go back down, we get past Facebook Meta, then you've got Adobe, Netflix, Costco. Would you have figured Costco is in the QQQ? QQQ gets a lot of people who think it's just computer technology stocks, right? And the truth of the matter is it actually has a pretty diverse set of names. The weighting on those names isn't as high as the names that you would figure would be in there. But nothing's really stopping a name like Costco to float to the top except for the performance of the company. If we wake up in 10 years and Costco is bigger than Google, then Costco will inevitably sit above Google in the QQQ. So keep that in mind. All right, let's look for some other interesting names. Of course, you got chips across the board. You guys know I'm fascinated with the chip sector. All the big ones are in here, basically. Then you have Pepsi. So a lot of people wouldn't say, you know, Coke or Pepsi is an exciting investment. They continue to churn out profits, dividends, the whole nine. But now you get a small slice of Pepsi. PayPal's one I already hold. We talked about the chips, Qualcomm, Intel. Look at Intel here. Do you think that Intel's turnaround story is going to materialize and they go on a next leg of super growth in 3 or 4 years when they get these foundries and facilities built? I think there's a good chance that that would happen over time. And it's just nice to have a small piece of Intel right now if it does. And of course, that weighting will increase as they perform, or should I say if they perform. AMD, same thing. Who wins AMD versus Intel over the long term? I mean, probably both of them, right? And you got an equal weighting to both right here. So you don't really have to worry about that battle as much. All right, scrolling through, Moderna is one. You guys know I don't buy individual healthcare stocks at all. So it's nice to be peppered in with some of those. Also down here somewhere, we should have some foreign stocks or international. Yeah, so here's JD.com. Alibaba is not in the QQQ right now, but JD.com is. So if Chinese stocks start to find their legs and go on another growth run, you've got something here with JD to represent that. You also have Mercado Libre. It's a stock I've been studying very closely, very close to at least wanting to buy it, as we've seen some of the valuation come down a little bit, the multiples come down. Who knows? I may still buy it as a standalone, but at least there's a small percentage of it here in QQQ. All right, so those are some of the reasons that I'm interested in the QQQ going forward. Frankly, I already own the QQQ in my ETF SEP IRA portfolio. It's had a good run, just as you would expect over the past year or so. Makes up about 25% of my SEP IRA. And over time, I'd like to replicate that in my stock portfolio. But I'm not in a hurry to do it all in one day, simply because look where we're at right now. We talked about the potential peak. We talked about pressures. I personally would not be surprised to wake up on any day over the next year probably and see, 3% dip, 5% dip. A lot of analysts have been talking about the potential for that for a long time. We haven't really seen it. We've seen some pullbacks, but it continues to go higher. And I do feel good that certain stocks are in a position to go higher at a normalized rate over time. There are some that are overvalued, at least fundamentally. But from a risk standpoint, I don't really see the QQQ as having a 50% risk to the downside anytime soon. And if it does, at that point, if it really did hit 50%, then some of those top weightings would actually legitimately be on sale. So if you think about maybe the Googles and the Facebooks and some of the others that have EPS and running a little bit higher on valuations, but certainly not pie in the sky numbers. And I think that's the big difference that you see today compared to, let's say, 1999, where you had, pets.com and some of these goofy companies out there that literally had no earnings. We have companies today with no earnings that have extremely high valuations, but we also have a pretty solid foundation of growing companies that do have earnings along with growing sales. So to me, like anything weird like a 50% correction or just a huge hit like that wouldn't really come from a valuation pullback. It would come from some other major event like, when COVID was first announced and obviously changed the world forever. And if you get in a situation like that with, world-changing information, then of course everybody's portfolio is wrecked. So you just have to decide if you want to double down or get out from there. Now, the most common bearish view on doing like a QQQ strategy would be, of course, that S&P 500, total stock market index. ETFs like that, people will say they have significantly less risk than QQQ because it's only 100 stocks, whereas obviously S&P's 500. If you say Russell 2000, you got 2,000 names. And I get that, and that's mathematically sound. But when it comes to winning, if you're bullish, winning will usually be best encompassed by the top 100 holdings. So if you're bearish on the stock market losing, I would say definitely consider S&P 500, total stock market index, because the floor of 500 companies, 1,000 companies, however many are in these larger ETFs, the floor is much higher because frankly there's more companies to pick up the slack for the ones that really do go down. But if you want to compare it to like winning the race where everybody participates in the performance, the QQQ to me with the top 100 names that is sprinkled in with, healthcare, consumer discretionary, even some international stocks in there. That's where I really want to focus, is just the top 100 of NASDAQ, because if a win happens, those wins will basically be multiplied. All right, guys, that's my take on the QQQ and adding it to my portfolio. I'll keep you updated with the progress as we go along. Let me know in the comments there if you're like me and just really struggling to find a direction in this market, but that holding cash is probably a losing game. Let me know what strategies you're doing in the comments below. And as always, please give the video a like, subscribe to the channel. We'll see you on the next video.